Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So now in this session, we are going to get started with a brand new chapter called as Cost of Capital. So till now, we have finished the introduction and we have also completed the chapter called as Time Value of Money. I hope you guys have revised time value of money because whatever we studied in time value of money, we are going to connect the dots here, and this chapter is entirely time value of money related to finance sector. Are you clear with this? So basically every single, see, because I told you that I will not be asking you guys to mug up any formulas, so what I'm going to do is all the formulas basically in this chapter, predominantly the entire formulas are going to be derived from the time value of money chapter. So we will link to that and we will study so that you need not mug up even a single formula. Clear with this, guys? Fine. And this is the second chapter that we are studying, right? Yes. So the chapter number 2 is as per our handbook. So cost of capital, right? And before we get started with this chapter, so I told you before we start every new chapter, I will just share some small story. So today, again, I'll just take a few minutes time to share something inspiring and then we will get started. Right, guys? Fine. So this story is about Priyanka Chopra. So do we all know Priyanka Chopra? Yes, of course. Bollywood, a famous Bollywood actress, Priyanka Chopra. For those who do not know, I'm telling, she is a famous Bollywood actress. In fact, she started her acting career with that movie called Tamilan. So that was her first movie, I think. So in Tamil with Vijay. Anyways, coming back. So she was actually born in Jamshedpur. Her dad was actually a physician in the Indian Army. So literally, they had to move around, across the entire country. So during her childhood, when she was in schools, I think in one interview she told that she had to change 10 schools throughout her schooling career. Then what happened in between? So for about 1 year, so what happened? She started living with her aunt in the US, right? So she went to the US and there she joined a school. So during her school days, now what happened was she's from India, right? So people in the US, that is her classmates, they used to bully her a lot. They used to call her brownie and curry because of the color that she was in, brown color. So we Indians are generally brown in color, right? So even the fairest Indian that we feel is fair, they will only treat us as blacks, or they will treat us as browns and all. Just like how in India we have this caste system, right? There they have this black and white concept. So that was peak at that point of time. She was being bullied. She used to feel that she looks really bad, right? In fact, in one of her interviews, she has even shared this. She told that during a lunch period, she used to go to the bathroom to have her lunch because she never used to feel comfortable around with her supposedly classmates. So that's the kind of trauma that she's gone through in her during her childhood. And then one fine day, or not so fine day, so I think two girls actually came and they picked up a fight with her. That was the first time when she fought back, and that was the first time she felt that yes, to defend myself, I can't just be covered and I can't just feel shy and introverted. I need to fight back. So that was the first time she protected or defended herself. Then after her 1 year in the US, she came back to India after her schooling and all. She wanted to do engineering, but that was the time when her mom, so her mother, she enrolled Priyanka Chopra for this Miss World India contest, right? She had no clue about this. It's called as the pageant concept, like that ramp walks and all that, right? So her mom enrolled her daughter, that is Priyanka Chopra, for that, and she won the crown. That is, she was awarded as the Miss World India 2000. And then she was shocked because till date, throughout her life, she was made to believe that she was extremely ugly and bad looking. And that was the first time when she got so much of confidence in herself that, look, I'm not as bad as what I was made to believe, right? So that was the time she got confidence. And ever since, she has been strongly working towards women empowerment, and she's been telling people that, look, we Indians are no inferior to the foreigners or the US, the Britishers. No, we are nowhere inferior. We are made to believe such. That is the only thing. We Indians, by default, we have this. Somewhere we are inferior. In what way are we inferior? Definitely not. So that happened, and then she that's when she started. Once she won that title of Miss World India in the year 2000. That was when she wanted to get into the acting career. Even when she went into the acting career, she wanted to act in her own style. So she didn't want to copy someone else or follow someone else's footprint. She said, I have my own style, I want to do it. In fact, she picked some bold movies which generally, not even heroes, still heroines also will not prefer, right? Heroes themselves will not prefer. The kind of movie, like she acted one movie called as Fashion in Hindi. I don't know how many of you have seen that movie. It's an A-rated movie for a simple reason that that movie's, the storyline is about, she would have portrayed the reality behind this pageant, this Miss World all this Miss World contest and all. So behind this, what are the politics that go behind? So generally, people will not be ready to take up these kind of things because their career will be over. That is the kind of thing. She was bold enough. She said, yes, I want to take it. See, from being an extremely shy and introverted girl who didn't even have the guts to face her own, classmates, she went to the bathroom to have her lunch. From there, she evolved herself into a bold woman. And then she started like doing a lot of empowerment. Right now, it was told, I don't know how far like accurate and all this is, but she is doing some really good thing. She contributes 10% of her earnings, if not more, towards upliftment of the society, like making girl children study and all this underprivileged children, giving them education access and all. So once she entered into this acting career and all, so what happened, she was in her house there was a maid, like the servant, or you shouldn't call it a servant, so maid, that person who works in the house, no. So her son was going to school, but her daughter was kept in house. That is, she was not made to study. So Priyanka Chopra sponsored her entire education and all, and made that girl also study. So basically, from all these things, this is a story of rags to riches, something of that sort. But what happened once she started growing? Even then, the other men around her and other people around her, they didn't like her success. They didn't like that, a woman, that too from India, is coming up this huge. She started acting in Bollywood also, I mean Hollywood also, in the US also. People didn't like. So many people, they were like really jealous about her. Well, that was a point of time where she met this guy called Nick Jonas, presently her husband, who's, again, she was criticized for that because he was 10 or 15 years younger to her. But still, she fell in love with him for a simple reason that he accepted Priyanka Chopra with the way she is. So that was the main reason that she later quoted in one of her interviews. And she, right from her school days, or right from her early ages, she had this fantasy that her engagement ring should be from a company called Tiffany and Company. That is, it's a very expensive jeweler, like based out in New York. It's a very expensive jewelry shop. So she wanted her engagement ring to be from Tiffany and Company. And yes, as we can expect, so this guy Nick Jonas proposed to her with that from a ring from the Tiffany and Company. But all these things apart, right now she stands out. She's well known. She's in fact a motivational speaker right now. She's given a lot of TED Talks as well. So basically, what is the moral of the story? One very important thing, what others think about you doesn't define who you are. If you break all the barriers and come out of whatever the comfort zone that you have put yourself into, automatically one fine day the world will start respecting you, and that's about it. So do not let anyone define who you are. So you have the full potential. Only you know the full potential. She didn't know her potential in her childhood, and then look at this. She was made to believe that she looks ugly. She was called as brownie and curry because of her color. Just imagine the kind of thing she would have gone through when she was in her school days. And then when she came back to India, she won the Miss World India contest. It is not like just any other thing. So she's known for, by the way, it's not just beauty, you know that. It's not just the physical appearances. They ask some questions also. You need to be intelligent enough to answer those questions. She did that. And that was when she got the confidence, and she said, she has told this in many interviews, do not let anyone make you define who you are. You know your potential. Just go ahead and make it happen. That's about it. Clear with this? So this is one of a very inspiring stories. Personally, it has inspired me a lot. With now she's like giving a lot of pep talks. She's going to places. She's going and motivating people. She's been working towards this women empowerment also. And first of all, we Indians should have, we should first stop feeling that we are not inferior. We are definitely not inferior to anyone. So that is something. We are equal to everyone. That's about it. I'm not saying we are superior and all. No. Those people, the white people, have this habit. They feel that they are superior to others. Everyone is equal. In fact, we Indians are ruling the Silicon Valley in the US. That's what I said before itself. Name the person. Sundar Pichai, MasterCard. So Google is being headed by our Indian. MasterCard. Then Microsoft, Satya Nadella, you name a company. Pepsi, this girl, this lady, Indra Nooyi, she was born and raised in Chennai. You know that? Indra Nooyi. So people are, top leaders are from India. So all I just want to share with you guys is, we are no way inferior to the rest of the world. Nowhere. Even if someone says that, oh, you are from India. No, it doesn't mean that we are anywhere below them. We are so much known for our intelligence, right? Just because of our physical appearance, or because of our demographic place changes and all, because of that, if someone is judging us, we should not fall for it. That's all. That's very important thing that we all should have. Because globally, we all have this feeling that, okay, this guy has finished a course from Canada or US, so which means he is well learned. Who told? The Indian education system is much, much better than so many other countries. So I want you guys to know that. And you are all doing a course called Chartered Accountancy, which is world number 2 in the accounting and audit profession. So it is no way so inferior to any of the things. In fact, not just in India, we have a global recognition. So tell this to yourself, and if you feel bad about yourself, or if you feel that you're good for nothing, sir, I've failed in the past. Do not let your past or others define your future. Clear with this, guys? So this is one very important learning lesson that we all should have, and I just felt it worthy to share with you guys, right? So now, shall we get started with this chapter called as cost of capital? Guys, yes? Right. So now let's get started with this beautiful chapter called cost of capital. Now, first, now guys, please catch up running notes, very important. Now, our subject, what is the name of our subject? Financial management. I told you, the overall objective of financial management is maximizing the wealth of the shareholders. This can be achieved by way of 3 objectives, 3 decisions. What are the 3 decisions? Financing decision, yes, investment decision, and dividend decision. And I told you that each of the chapters that we have in our syllabus, it goes on to achieve either of these 3 objectives. Then 2-3 chapters alone, I said they are common topics for the entire financial management. Now this chapter, cost of capital, comes under financing decision. Financing decisions means what? Decision relating to the fundraising activity, that is raising of capital. Capital means what? Money, finance. Are you clear with this? So this chapter fits into which decision making? Financing decision. That is, this is relating to fundraising activity. Clear with this, guys? Clear with this? Fine. Now, what are we going to study in this chapter? Guys, these things are not there in your handbook or in your study material. So this I am explaining it to you. Please catch up running notes. Clear with this? All the formulas, everything will be there. We are doing it as per the study material only, but the background, that is the biggest value addition of attending lectures. Clear with this, guys? Now, when I'm starting a company, you know that there can be multiple sources of finance. We have already seen it, right? Yes. Guys, there are multiple sources of finance, right? What are the multiple sources of finance? Equity share capital, right? There could be preference share capital. There could be debentures and so on. Correct, guys? Yes, I'm just naming. There could also be other things like bank loans. Even your retained earnings is a source of finance. How? You have earned the money in the past, accumulated the profit, now you are using it. It is a source of finance only, no? Correct. Fine. Now, just an example I'm giving you. Just an example. Let us say the company has raised 30 crores from equity share capital, 20 crores from preference share capital, 50 crores from the debenture route. What is the total capital raised by the company? 100 crores. Correct, guys? Yes? Now, you tell me, guys, each of these sources of finance, do they come free of cost or do they come with a cost? Guys, do they come free of cost? Are they free or do they come with a cost? Answer, please. Yes, they come with a cost, obviously. Correct or not? Yes, guys. Yes. Now, in this chapter, we are going to compute the cost associated with each of these sources of finance and also the cost associated with the overall capital. Clear with this, guys? The cost associated with equity shares is called as KE. That is, K stands for cost, E stands for equity. Clear with this? The cost associated with preference shares is called as KP. The cost associated with debenture is called as KD. Are you clear with this, guys? Are you clear with this? Clear with this, guys? Yes? Now, always remember, there are some ground rules that you need to remember before entering into this chapter. First, what I told you, we have to compute the cost associated with every source of finance. Correct, guys? Yes. Now, this cost in this chapter, the cost in this chapter is always expressed as percentage. The cost in this chapter is always expressed as percentage. It is not cost in absolute amount. Are you clear with this? Are you clear with this? One step further. This cost of capital is nothing but the discount rate that we studied in time value of money chapter. The discount rate that we studied in the time value of money chapter, the previous chapter. So what is this? Now, guys, we saw this IRR computation. Guys, we saw this IRR computation. I told you, IRR computation in a complete financial transaction, there will be both inflows and outflows, and the rate that equates my inflows with my outflow is called as IRR. And this IRR can be, if it is computed from the viewpoint of the company, it is a cost. Correct? If it is calculated from the viewpoint of the investor, it is a return for him. Are you clear with this? Are you clear with this? Throughout this chapter, we are going to compute what? This rate, discount rate only, which is called as a cost, which means from whose perspective are we going to do the computation? From the company's perspective, we are going to do the computation. Are you clear with this, guys? So this chapter is done from the viewpoint of the company, right? The cost that we are talking about is always expressed as a percentage. It is nothing but the discount rate or the IRR that we are talking about. Clear with this, guys? Clear with this, guys? So what happens here? For instance, I'm just giving an overview. We will be seeing every single component. Equity share capital. What happens? Company will initially receive amount, right? Every year they need to repay dividend and all. Correct or not? Up to what? Perpetuity. Correct? Inflow is there, outflow is there. The rate that equates the two is called as the discount rate applicable for equity share capital, or that is called as KE. Are you clear with this? We can use the time value of money concepts and find out. Clear with this, guys? Similarly, preference shares also, it can be redeemable, irredeemable. We'll be seeing all that. Clear? Based on that, again, the rate that equates my inflow with the outflow with respect to the preference share capital is called as KP. Similarly, the rate that equates my inflows and outflows of debenture is called as KD. Are you clear with this? So now basically, example. I'm telling you, KE is, example, I'm just saying 12%, right? KP is, let us say, 11%. KD is, let us say, 9%. Example. Fine. Which means what? With respect to 30 crores, for this 30 crores, the effective cost that the company is bearing is how much? 12%. Correct? With respect to this 20 crores, the effective cost that the company is bearing is how much? 11%. With respect to this 50 crores, the effective cost the company is bearing is how much? 9%. Correct? Now, they want you to compute. So component wise computation, we will be doing it. So component wise cost computation is called as the respective cost. That is KE, KD, KP and all, it can be there. Correct? Now, they are saying, I don't want all this. Overall, what is the money I have raised? 100 crores. I know that out of 100 crores, 30 crores, the cost is 12%. For 20 crores, the cost is 11%. For 50 crores, the cost is 9%. Clear with this? No, I want to know, give me 1% for this entire 100 crores. What is the overall cost that you have incurred? Are you clear with this? That is called as KO. KO stands for overall cost of capital. This is popularly known as WACC, weighted average cost of capital. So for 30 lakhs, it is 12%. For 20 lakhs, it is 11%. For 50 lakhs, it is 9%. Now tell me, for the entire 100 lakhs put together, average it out, weighted average and calculate. It is called as weighted average cost of capital. Clear with this? Every single thing we will be doing it. You need not worry. I am just giving you a big picture as of now. We have not even entered into the chapter. We are still in the background of this particular chapter. Clear with this, guys? Clear with this? Very important thing. From whose perspective are we doing this? From the company's perspective. Time and again, students forget this. That's why I am making this very clear at the beginning itself. We are doing this only and only from the viewpoint of the company. Why? How do you know, sir? Name of the chapter itself is called as cost of capital. Correct. Correct. If you're telling this, if you're talking about these things from the perspective of the investor, I will not call it as cost of capital. I will call it as return on investment. Correct? No. Correct. Yes. IRR computation only. From his viewpoint, it's called as a return. From my viewpoint, it is called as cost. Correct, guys? Are you clear with this? Inflow followed by a series of outflow can only be cost. Correct. Outflow followed by a series of inflow can be a return. That is why I said that FD example, switch the perspective and see. Clear with this, guys? Clear with this? Are you all clear with this? So component wise, we are going to compute the cost. And remember, costs is always expressed in percentage. It is nothing but the discount rate that we saw in time value of money chapter. Are you clear with this? Are you clear with this? So please write down guys, write down first. All this running notes, I'm not going to, that's why I clearly told you, I asked you to catch up running notes, so please catch it up. That's all. Write down. First, introduction. Write down. Cost of capital. Cost of capital is the, take a red ink and write discount rate, normal ink, which we studied in TVM chapter. TVM means time value of money, which we studied in TVM chapter. Second point, in this chapter, we will use the following terms for discount rate. We will use the following terms for discount rate. We will use the following terms for discount rate. Colon, put a colon, come down and write. Equity hyphen, write down KE within bracket, cost of equity. Then debenture hyphen, for debenture what is it called as? KD, small d, kuti d, okay, small d, within bracket, cost of debt or cost of debenture. Then preference hyphen, what is it? KP, correct? KP within bracket, cost of preference. Then write down retained earnings. Write down, that is also a source of finance. We will be studying everything. Don't worry about it. Write down retained earnings. retained earnings hyphen KR. KR. Clear with this? Then write down. Overall cost of capital. Overall cost of capital hyphen KO. Overall cost of capital hyphen KO. Within bracket, write down weighted average cost of capital. Weighted average cost of capital, which is popularly called as WACC. WACC, WACC. Weighted average cost of capital. Clear with this, guys? Are you all clear with this? We will be studying about this in depth. Don't worry. That is what is this entire chapter all about. Clear with this, guys? Clear with this? Done? Have you all noted down? Right? Now go to your handbook. Please take this page. I think it's page number 7. Please take this page. Right? So now look at this, guys, what they have given in a pictorial presentation. By the way, all these things, all these explanations, I have directly taken from the institute study material. Clear with this? The extra learnings, whatever I am teaching you, that I am giving you by way of notes and our running notes. Clear with this, guys? Fine. All these things are exactly, I have taken it word by word from the study material. I'm telling you openly, because ultimately we need to prepare only from the study material for your exams. Clear with this, guys? Fine. Now, so with respect to the sequencing part, I will be doing it in a little different sequence. That is, I will not be exactly doing para by para as given in the handbook. That is, handbook is nothing but your study material. Clear with this? So I will be doing it in certain way that you will logically understand the subject. Clear with this, guys? But we will be covering everything. You need not worry about it. Fine, guys. Now, this is what they are saying. So, cost of equity. In this chapter, we'll be studying all these things. Cost of equity, popularly called as KE. You can write down here. Cost of preference shares, KP. Cost of debt, long-term debt, KD. Cost of retained earnings, KR. And in between, in the center, they have mentioned WACC, weighted average cost of capital. That's called as KO. O stands for what? Overall cost of capital. Clear with this, guys? In this chapter, this is what we are going to study. Clear with this? So, we will be computing the component-wise cost for every source of finance. First, let us focus on that. Then I will tell you how to compute this weighted average cost of capital. Clear with this, guys? Component-wise source of finance, right? We need to calculate the cost. That cost is nothing but matching of the cash flows. So first we need to understand what are all the cash flows that gets generated for every source of finance. For example, in case of debentures, you will be paying interest every year. Correct, guys? Yes. In case of preference shares, you'll be paying preference dividend every year. Clear with this? So the nature of cash flows that arises for every instrument will be slightly different. Are you clear with this? Fine. Are you clear with this, guys? Are you all able to understand? Right. Now, before we get into this area, before we get directly into this area, 1 second. Yes. Before we get into this area, there is one more thing, important thing that I wanted to tell you. 1 second. Okay, fine. Now, there is one more very important thing that I wanted to tell you. Now, if you see, now you might have studied this, you would have definitely studied this in your accounts. Securities can be issued at par, premium or discount. You know that, right? That is face value, let us say is 100 rupees. If I am issuing it at 110 rupees every share, for every share I am receiving 110 rupees from the investors, it means that I am issuing it at a premium. If I am issuing it at 90 rupees, example, then I am issuing it at a discount. If it is exactly at 100 rupees, it is at par. Or in other words, if your issue price is more than your face value, premium, less than the face value, discount, at the face value, par. You know that? Similarly, at the time of redemption, so this is applicable only for your preference shares and your debentures and all, because no concept of redemption in equity shares. Redemption can also happen at par, at discount, at premium. You guys know this? Yes. You guys know this already? Yes, guys. Fine. Just quickly make note of this. Make note of this. Write down. Take a green ink and write down. Different types of issue price. Guys, quick. Write down. Securities of a company may be issued at. Securities of a company may be issued at. Come down and write point number 1. Par, within bracket, rupees 100. This is example only. Write down. Example rupees 100. Should it always be issued at 100 rupees? Should the face value can be 1 rupee or 10 rupee or 100 rupee or 1000 rupee, it can be anything. It depends on the company, they get to decide it. Clear with this, guys? Yes, par. The second one is discount. Example, rupees 90. Should issue at discount always be at 90? It can even be 99.5. It depends on the company. I am just giving an example. Clear? Similarly, the last one is premium. Within bracket, example, rupees 110. It need not be 110, it can also be 550 rupees. Anything it can be. If it is issued at a price more than your face value, it is called as a premium. Clear with this, guys? Write down. The third concept, write down different types of redeemable value. Guys, quickly write down different types of redemption value. Redemption value. Once again, the same three things: par, discount, and premium. Write these things. Examples: 100, 90, and 110. Done, guys? Done? Then write one note. Line gap, write one note. If the question is silent, guys, what will you do? If the question is silent, assume that the issue price and the redemption value are at par. Clear with this? If the question is silent, assume that the redemption price, issue price, and the redemption value are at par. Clear with this, guys? Right? All these things, please note down. Even if you think you already know this, please write down. It will help you in the long run. Trust me. Even if you think you know this already, please write this down. Next, done, guys? Done? Write down the fourth concept. Flotation costs stroke issue cost. Flotation costs stroke issued costs. Okay, fine. Now, guys, can anyone tell me what is this flotation cost or issue cost? Have you heard of this? Flotation cost, you have not heard of it. Accounts, it's not there in accounts. Flotation cost, issue cost is there in accounts. Anyways, fine. Coming back, I'll tell you, no problem. Now, this flotation cost and all is applicable in case of new securities only. That is, only for the securities that are being issued newly for the first time or for the second time, subsequent times also. That is, when the company goes to the primary market for fundraising. Clear with this? That is when this happens. Sir, what do you mean by issue cost? The costs that are incurred for me to raise the funds. Example, have you heard of underwriter's commission? Yes, underwriter's commission. Then underwriter's commission is an example of flotation cost. Then your preparation of MOA, not MOA, sorry, this when the company is raising money from the public, they need to prepare something called as prospectus. Have you heard of it? Yes. Foundation, right? CA foundation. Yes, prospectus or intermediate, whatever it is. They need to issue a document called as prospectus, wherein they need to tell that how we are going to use your funds, what are our future projections, what are our past financial record, everything, who are at the helm, that is, who are the board of directors, who are going to be the persons, the top managerial, key managerial persons who are going to run the company, all the details they need to give. Correct? This prospectus need to be printed and circulated. Correct, guys? Yes, this cost. Underwriters commission, I told you, brokers commission, all these are examples of flotation cost. Flotation or issue cost. These two are alternatively usable words. What do I mean by this? That is the cost incurred for the purpose of fundraising activity. Is it an inflow or an outflow for the company? Obviously, it's an outflow for the company. That is, without me incurring these expenses, I cannot raise money from the public. Are you clear with this, guys? Are you clear with this? Yes. Sir, why is this important, sir? I will tell you. I will tell you. Now, this, what is the name of this chapter? Cost of capital. What do you mean by cost of capital? I told you. It is nothing but the discount rate. Correct? So, source-wise, that is, every source of finance has its own cost of capital. Guys, correct? Right? Fine. Now, how do we arrive at the cost of capital? Nothing but this IRR calculation. Yes, for you to compute IRR, how will you do it? You will match inflows with outflows. Guys, correct? Right? For example, debenture. I will have to calculate the total inflow. I receive inflow. That is, first I receive funds at the beginning of the period, followed by a series of outflows. Correct or not? Yes. Now, when I am receiving this inflow, basically, I get the issue price, correct? That is, if I am fixing my issue price at 110 rupees, 110 rupees I will get, no doubt. But wait, this entire 110 will not be the inflow, because I will also be incurring some flotation cost. Let us say for every share raised 2 rupees the flotation cost. So technically speaking, I will be receiving the net inflow at the beginning will be 110 minus 2, which is 108. Correct or not? Or in other words, this flotation cost needs to be reduced from my issue price to arrive at the net proceeds. That net proceeds, the word net proceeds stands for what? The initial amount of inflow that the company receives. Are you clear with this? Because when it comes to sources of finance, the company's viewpoint, there will always be an initial inflow followed by a series of outflow. Correct? When you are computing that initial inflow, take the issue price, from that subtract what? Subtract your flotation cost, also known as issue cost. So issue price minus flotation cost gives you what? Net proceeds. That net proceeds is nothing but the inflow amount that you get. Are you clear with this, guys? Are you clear with this? So technically, this flotation cost is an outflow which needs to be adjusted with the issue price that you receive. So that's why we are separately, that's why I've given it as a separate concept so that you guys can understand this. Clear with this, guys? So because this entire chapter is about matching inflows with outflows, please don't talk about revenue expenses. No, that is your accounts. We are only talking about cash flows, inflow, outflow. That's all we are talking about. Clear with this? Whether it is a capital receipt, revenue receipt, we are not bothered about that. Match the cash flows. Are you clear with this? Match the cash flows. Please write down. Quickly write down, guys. Quickly write down. Fine. Flotation or issue costs. So these are the costs. These are those costs which are associated with. These are those costs which are associated with. Which are associated with the issue of. The issue of. Take a red ink and in caps write down new. N-E-W. The word new alone, write it in red ink caps. New, normal font, normal ink, securities. New securities. So I'm using the word, carefully listen, I'm using the word securities. Means what? Flotation cost can be there for preference shares, debentures, equity also. Clear with this, guys? Yes. Example, write down brokerage, commission, underwriting expenses, etc. Right? Done. Inside that, second point, under this heading only, write down second point. These costs apply only to new shares or new securities. These costs arise or apply only to new issues. New issues. Only when I'm making a fresh issue, I will be incurring this cost, and not to the existing securities. They are not incurred for existing securities. The importance of this you will know as we enter into the chapter. Clear with this? So these costs apply only to new issues and do not apply to existing securities. Clear with this, guys? Third point, write down. In case the flotation cost is given in the question, in case the flotation cost is given in the question, comma, the issue price must be taken, after deducting the flotation costs. After deducting the flotation cost, the issue price should be taken after deducting the flotation cost to arrive at dash. Just now I told you what is it called as, to arrive at net proceeds. Take a red ink and write it in caps. To arrive at net proceeds. Quick, guys, quick. To arrive at net proceeds. These are some fundamentals before we enter into this chapter. That's why I'm giving you this background. Always remember, more the time you spend on the concepts, lesser will be the time you spend in the questions. Remember this always. It's a thumb rule for a lifetime. Clear with this, guys? Yes. Right. Now, so what is the reason why you reduce it? Why you reduce it from the issue price? Because this is nothing but an outflow. Fine. If you want, you can write it in bracket. Since, write down within bracket, continue writing. Since flotation cost is an outflow, it is being reduced. Write down. Since flotation cost is an outflow, it is being reduced. It is being reduced. Done, guys? Done? Now, one more thing I wanted to tell you guys. Now, look at this. They are saying the company is issuing debentures. Okay? Right? Face value is 100. Issue price or the current market price. Issue price is generally the current market price. In the market currently, it is being traded at 110 rupees. Clear with this? Now, in this question they have given, the flotation cost is 1%. This is all they have given. The question is, should you apply this 1% on the face value, or should you apply this 1% on the issue price? What will you do? Guys, tell me. They have just said flotation cost is 1%. That's all they have given. 1% on what? Face value or issue price? What do you think? Quick. It is on issue price. What do you think? Issue price. What do you think? Issue price. Right. Ideally speaking, you guys are very correct. It should be on issue price. Why? Anyways, I'm going to raise 110 rupees. Correct? On the amount I raise only, this commission brokerage, this underwriters and all will charge me their commission. Correct? For them, face values, they are not bothered about it. Face value is a base on which you compute the interest and all for your future purposes. Today, I am helping you to raise 110 rupees. That is what the brokers will say. You pay me commission on that. Clear with this, guys? Clear with this? But, as per our institute study material, there is a disparity. They, in some sums, institute it is taking this 1% on face value. In some sums, they are applying this on issue price. If you ask me, strictly speaking from a finance perspective, it has to be applied on issue price. But institute, in some questions, they are applying on face value. Some questions, they are applying on issue price. Now, I can understand your question. What should I do in exam? You can either apply it on the face value or apply it on the issue price. But whatever you do, please write a note in the question. If this is silent, suppose the flotation cost they have clearly given, it's 1% on face value, then you have no other option. You can directly go. If the question is silent, then you can apply it either on the face value or on the issue price, but please write a note about this. Clear with this? Catch up running notes in a language in which you understand. Clear with this, guys? So in the absence of information, flotation cost can be applied either on face value or on the issue price, but please write a note in exam. Clear with this, guys? You are safeguarded. For your note, for your assumption, your answer is correct. Clear with this? Guys, clear with this? I am telling these things in the beginning itself so that we don't face any issues when we are solving questions. You will see how quickly we can solve the questions. All the things we have already seen. Just that I need to set the context and automatically we will get going. Clear with this, guys? Done? Completed, guys? Done with this? Have you all completed this? Right? Shall we go to the next concept? Yes? Fine. Now, write down concept of tax saving. Concept of tax saving on interest. Concept of tax saving on interest. Now, what is this? Now, let me just give you an example. Right? Now, there are two companies, guys. There are two companies, A Limited, B Limited. Okay, you can also write this down. Two companies, A Limited, B Limited. Right? You can take this as an example. Now, recall, I think I told you in the first lecture, costing stops at EBIT. From there, FM starts. I told you. That format, can you tell me? It starts at EBIT. Stands for what? Earnings before interest and tax. Correct? From this, you subtract what? Minus interest. Correct? You get what? EBT. Correct? Earnings before tax. Which means what? From this, what we need to reduce? Tax. From this, we are reducing tax. Let us assume the tax rate is 30%. Just an example. Right? Now, this is called as what? Earnings after tax. Correct? Earnings after tax. Now, whom you will pay first? Preference shareholders minus preference dividend you will pay. Correct? Right? The balance amount is called as earnings available to the equity shareholders. We will call it as EFE for the time being. Earnings available for equity shareholders. Clear with this, guys? Clear with this, guys? Are you clear with this? Perfect. Now, let me take this example and explain you the concept of tax saving, which is very, very important. The fundamental thing again for our this particular chapter. Fine, not just this chapter. Going forward, it will be helpful for us throughout the subject. Now, what is this all about? A Limited, B Limited, let us say these two companies are in the same sector. Clear with this? These two companies are in the same sector, the same let us say some manufacturing sector. Okay, let us say A Limited is Maruti Suzuki, Maruti Udyog Limited. B Limited is, let us say, Tata Motors. Both the companies are what? Automobile sector in our example. Clear with this, guys? So, for them, industry is the same. Everything is the same. Clear with this, guys? Now, let us assume that for both the companies, the EBIT, earnings before interest and tax, is 100 crores. So, rupees in crores, I am saying. Both the companies have earned the same amount of profit. Clear with this, guys? Clear with this, guys? The only difference is what? This company A Limited has raised the entire money from debt channel. Example only I am saying. Okay, they have raised some money only from the debt channel. Whereas B Limited, what they have done, they have raised the money from the preference channel. Are you clear with this? Let us say they have raised some money, 1000 crores or whatever it is. Both the companies have raised exactly the same money, 1000 crores. Example. Clear with this? Only difference is what? A Limited raised his funds by way of debentures. B Limited raised that exact amount but by way of preference shares. Are you clear with this, guys? Are you clear with this? Now, A Limited will be paying something called as interest. B Limited will be paying something called as preference dividend. Yes or no? Clear with this, guys? See, both the companies are starting with the same profit. They have the same capital also, just the source of capital has changed. Are you clear with this? Let us assume the cost for that capital is also the same. Let us assume the total interest paid by A Limited is 30 crores. Clear with this, guys? 30 crores. Are you clear with this? Are you clear with this? So tell me, what is the EBT? 70 crores. Now, let us say the tax rate is 30%. So tell me, what is the tax on 70? Yes, 0.3 into 70. Tell me, guys. 21 crores, right? 21 crores, right? So what is the earnings after tax? Guys, quick, guys. How much is it? 49, right? From that preference dividend, A Limited, did it raise any money from preference? No, nothing will be there. So what is the profit available to equity shareholders? 49 crores. From this, they will pay dividend. Partly, they will actually retain the remaining amount. That and all is a different story. Let us not focus about that right now. Clear with this, guys? Right? Now, let's go to B Limited. B Limited is what, in our example, Tata Motors. Now, Tata Motors, have they raised any money from interest? That is, have they raised any money from the debenture route? No. Any interest payment? No, guys. No, right? So, what is the EBT? 100. Now, what is the tax? 30% on 100. 30 crores, right? So now what is my EAT? 70. Now this company needs to pay dividend, correct? Let us say the dividend amount is also exactly the same. How much? 30 crores. Clear with this? Minus 30. Now how much is the earnings available for equity shareholders? 40. Guys, 40. Now, can you tell me, both the companies had the same profit? Clear? Both the companies raised the same amount for which they paid the same cost. Clear with this? Here also 30, here also 30. Still, if you see, profit of A Limited is 49, profit of B Limited is only 40. Why is there a difference in profit? Same profit, overall EBIT was the same, the capital raised was the same, the cost with respect to that capital was also the same. Still, there is a change in profit. Why? Because there is a change in your tax outflow. There is a change in your tax outflow. Clear with this? In this case of A Limited, they had to pay a tax of only 21 crores. Clear with this? Whereas B Limited had to pay a tax of 30 crores. Why, sir? Because interest is a tax deductible expense, or in other words, for you to understand, I am assuming that you have not studied income tax. That way also I am saying tax is computed on what? Earnings before tax, correct? So the base on which I compute the tax, if that reduces, my tax liability reduces, correct? Now, for computing my EBT, which is the base for my tax computation, I am allowed to reduce the interest alone. Clear with this? So here A Limited was it was enough for A Limited to pay tax only on the 70 crores, whereas B Limited had to pay tax on 100 crores. Are you clear with this? Sir, they paid 30 crores. No, sir, B Limited also. Yes, the 30 crores was allowed as a deduction after paying the tax. Are you clear with this? But for the purpose of paying income tax, dividend is not a tax deductible expense, whereas your interest is a tax deductible expense. So clearly, if you see, this company, A Limited, need not have to pay this tax on the 30 crores, correct or not? So how much is the difference here? 9 crores is the difference, guys, correct, guys? What is this 9 crores? How did you get? This is nothing but 30 crores into 30%, correct? That is, the tax amount on this 30 crores I need not pay because my base reduced by 30. Correct, guys? On the 30, I need not pay 30%. That is the tax saving. Are you clear with this? Are you clear with this? So you tell me one thing. Debenture is there. Preference shares is there. These two are not directly comparable sources of finance. Why? Because debenture as a source of finance has a tax saving, Whereas preference as a source of finance does not have a tax saving. Are you clear with this? Are you clear with this? So what do you say here? Write down, guys. Please write down conclusion. Conclusion. Write down. For A Limited, tax saving due to interest is equal to tax saving due to interest is equal to rupees 9. Tax saving due to interest is rupees 9. Next line, write down. This 9 rupees is, pull an arrow and write down interest amount into tax rate. Correct, guys? Why is it interest amount into tax rate? On that 30 crores, I need not pay any tax. Why? Because that was reduced for the purpose of computing my EBT. Are you clear with this? Are you clear with this? What is my interest amount? Overall, 30 crores, right? 30 into 30 percentage. How much is that, guys? How much is that, guys? Rupees 9 crores. Correct? Are you clear with this? Rupees 9. Correct? Now write down, therefore, the net interest cost to the company, the net interest cost to the company is, therefore, the net interest cost to the company is, now tell me, guys, what is the net interest cost to the company? Look, the company paid 30 rupees of interest, but wait, parallelly it saved 9 rupees of tax. Correct? What is saved can be treated as an inflow. Correct? Right? What is saved, that is, I need not have to pay this amount, is as good as an inflow. Correct or not? Yes. So technically speaking, the effective cost of interest with the company is how much? 30 minus 9, only 21. Are you clear with this? Write down. The net cost of interest to the company, the net interest cost of the company is rupees 30 minus rupees 9, which is equal to rupees 21. Rupees 30 minus rupees 9, which is equal to rupees 21. Under the 30, pull an arrow and write down paid. Under this 9, pull an arrow and write down tax saved. So the net interest cost should also consider the tax savings. It is also known as tax shield or tax savings. Clear with this, guys? Shield means what? Shield, you protect yourself. You've seen this shield, right? So all the, if you see the soldiers and all will be having shield and a sword. That shield is to defend themselves, to protect themselves. So there is a saving, there is a protection for me to the extent of 9 rupees. Are you clear with this? Are you clear with this? Or in other words, guys, you tell me, I'm just going to derive a formula for you, which you need to remember, right? So this 30 rupees minus 9, correct? Now, can I split it and write it as 30 minus, this 9 is nothing but 30 into 30 percentage, correct? Yes, right, guys? Now, can I take this 30 common out? Yes. So, or I can rewrite this as 30 into 1 minus 30 percentage, guys, correct or not? Or in other words, this is nothing but interests into 1 minus t. Are you clear with this? So the net interest cost outflow for the company, can I say, is interest into 1 minus tax rate, or in other words, interest amount on that. Anyways, 30% I'm saving, correct? Or technically speaking, only 70% of the interest is my cost. Guys, clear with this? Are you clear with this? So write down, please write down the net interest cost is equal to, okay, take a black ink and write this, please, is equal to interest amount, not the interest rate, guys, interest amount into 1 minus tax rate. 1 minus tax rate. Are you clear with this? Or this is equal to rupees 30 into 1 minus 0.3, or this is nothing but rupees 21. Are you clear with this, guys? Are you clear with this? So tell me, guys. So now if I say every year for me, If I raise the funds by way of the debt channel, debenture channel, my effective cash outflow is how much? Effective cash outflow is how much? 21 rupees only, correct? Whereas if I raise my funds through the preference channel, the effective cash outflow is how much? 30 rupees full, no tax saving. Are you clear with this? And now these two are comparable. Clear with this? It is not 30 versus 30, it is 21 as to 30. Are you clear with this? And why is it so? Because the concept of tax saving is applicable only on debentures or only on the debt mode of finance. Clear with this? Even on loans, on interest, it is applicable. Clear with this, guys? Are you clear with this? This is the rule that is followed generally across the globe, also in India. Also, our Income Tax Act, there is a section called section 36(1)(3). That section clearly says that any interest paid on funds borrowed is allowed as a tax deductible expense. So by way of that section, we have the deduction. Clear with this, guys? Are you all clear with this? So now tell me, whenever I'm saying in all the sums, let us say debentures, I am raising funds through debentures. Initially, I receive inflow, correct? That inflow calculation, I need to adjust for flotation cost, correct? Right? Every year there is an outflow, correct, guys? That outflow is what? By way of interest, but wait, it is not just interest into 1 minus t. Are you clear with this? So every year the cash outflow for debentures will be what? Interest into 1 minus t. Why? Yes, no doubt I am paying the full interest, but parallelly there is a tax saving for me. The net amount should only be considered as an outflow for me. Are you clear with this, guys? Are you all clear with this? Are you all able to understand this? Yes, right. Now come again, leave a line gap and write down. For B Limited, there is no tax saving. For B Limited, there is no tax saving. Therefore, cost of dividend to company. Therefore, the cost of dividend to company is equal to rupees 30. Therefore, the cost of dividend to company is equal to rupees 30. Is equal to rupees 30. Clear with this, guys? Clear with this? Now, I told you guys, you remember, the cost of debenture is called as KD. Cost of preference shares is called as KP. Now, since there is a tax saving which is applicable only with respect to debentures, I am just telling you as a passing reference, generally KD will be less than KP. Are you clear with this? Why? Because KD, that is cost of debenture, has a tax saving in it. Outflow will be relatively lesser. So KD will be generally lesser than KP. Are you clear with this, guys? Are you clear with this? Fine. Now, shall we get started? This is where we are going to start with this chapter, right? First source of finance will be debentures. Let us get started with it, shall we? Till now, we have studied the background. So now we know why we are studying this chapter, the context and all. So now, shall we get started with the first source of finance, which is KD, that is cost of debentures. Shall we, guys? Yes? Right. Let's get started. Now, write down. Write down. Sixth, cost of debenture. Cost of debenture. Within bracket, KD, right? KD, K small d. Now, guys, now you tell me debentures are of two types. We have seen debentures can be irredeemable debentures. Is it possible? I told you, irredeemable debenture is also possible. Irredeemable preference share is also possible. We saw it in the previous chapter while computing the sums. Correct, guys? Yes, it can be irredeemable debenture. Irredeemable debenture, or it can be redeemable debenture. Correct, guys? Yes, guys. Yes, are you clear with this? Are you clear with this? So, there are two types of debentures, irredeemable debentures and redeemable debentures. Are you clear with this? First, let us see irredeemable debenture. How to calculate the KD, with respect to irredeemable debenture. Shall we do it, guys? Write down A, irredeemable debenture. Irredeemable debenture. Irredeemable debenture. Now, guys, recall our discussion. Now, we saw in that time value of money chapter, right? There we saw the present value of debenture is nothing but the value of debenture. Yes, is nothing but the present value of all the interest payments, correct or not? Yes, at a discount rate, yes or no? Or in other words, can I say, recall I told you there, B0, I told you the value of debenture or a bond, the present value of bond is nothing but the present value of all the future cash flows. Here the future cash flows are what? Interest, correct or not? Yes, guys, are you clear with this? Yes. Now every year, what is the cash flow? We are talking about this from the viewpoint of company. So with respect to debenture, what is the cash flow every year? Interest. No, interest into 1 minus t. Are you clear with this? Parallelly, there's a tax saving. So can I say the present value of bond is nothing but interest into 1 minus t. This is the annual cash flow. Now you tell me, guys, we're talking about what? Irredeemable, which means perpetual model, correct? Now with respect to debenture, every year there will be same cash flow or different cash flows? Same or different? Every year same cash flow, correct? Now what is the formula for sum of infinite equal cash flows? Sum of infinite equal cash flows. Tell me, what is the formula? Annual cash flow divided by discount rate. Correct, guys? So here, annual cash flow, numerator, denominator, discount rate. What is the discount rate called as here? KD. Are you clear with this? We need to calculate KD. Guys, yes or no? Are you clear with this? This is nothing but annual cash flow, but it is a net annual cash flow. Remember that. Clear with this? Divided by discount rate. Guys, and what did I tell you? This chapter is about calculating the discount rate only. That is nothing but the cost. It is always a percentage. I told you. Now are you able to relate to this? Or can I say here, can I say KD is equal to interest into 1 minus t divided by B0. B0 means what? The present value of the bond. Or you can also write this B0 as NP. NP stands for what? Net proceeds, the amount that I will be receiving today. How do you calculate net proceeds? Issue price minus flotation cost. Are you clear with this, guys? Are you clear with this? You can use any of these words. Are you clear with this, guys? Yes, if flotation cost is given, it should always be reduced. Are you clear with this? Are you clear with this? So this formula, are you able to understand, guys? This formula, are you able to understand? This is nothing but what? Your time value of money, sum of infinite equal cash flow, annual cash flow divided by discount rate. So the present value, the B0 of the bond or the debenture is equal to interest into 1 minus t upon KD. You cross multiply, take KD here, bring B0 here. So KD is equal to interest into 1 minus t divided by the net proceeds. Are you clear with this, guys? Are you clear with this? Fine. So now we did it through the time value of money chapter. From there, we understood this concept. Sir, if I didn't study time value of money, right, then I will tell you this is nothing but, from the viewpoint of company, this is nothing but what I pay divided by what I receive. Are you clear with this? From the viewpoint of company, in the numerator, what do you have? The effective amount that the company is bearing, what I pay, interest into 1 minus t. Correct, guys? What is the denominator? Net proceeds, the initial inflow. Are you clear with this? So cost is nothing but your what I pay upon what I receive. Are you clear with this? Are you clear with this, guys? Any problem here? Any problem here? So this is how we compute cost now effectively. What I pay divided by what I receive. Correct? Yes, guys. Are you clear with this? I am incurring a cost of 10 rupees. Correct? But I effectively raised how much? 90 rupees. So 10 by 90 is how much, guys? 10 by 90 is how much? How much is this? 10 by 90? 1 by 9, guys. Let's quickly do it. 0.1111, or this is nothing but 11.11%. Correct? Let us say I have raised 90 crore rupees worth of money Every year I need to pay an interest of 10 crore rupees, example, right? So what I will do, what I pay divided by what I receive. Effectively, my cost is how much? 11.1%. Are you clear? This is how we compute, right? From the viewpoint of investor, if you do this computation, it's called as a return. Correct. From the viewpoint of the company, if you do it, it's called as cost. Are you clear with this? Fine. If not, you can also use the time value of money logic and do it. Guys, simple. Any problem here? Any problem here? So now go to your study material. I mean the handbook that I've given you, right? Long-term debt, they have given all these things. Look, long-term debt, cost of long-term debt, irredeemable debt and redeemable debt. Look at this, cost of irredeemable debt. What is the formula they have given? Look at this, guys. What is the formula they have given? Yes, KD is equal to I into 1 minus T divided by NP. So you can write this 1 minus T here, or you can put it outside separately. It doesn't make a difference. Clear with this, guys? You can also write it like this. I into 1 minus T upon NP. Like this also you can write, no problem. They have kept it outside. Clear with this, guys? What is the logic for this? What I pay upon what I receive. Or alternatively, time value of money, sum of infinite equal cash flows. Now are you able to understand why we started with time value of money? Clear with this, guys? And they have given component wise what is the meaning. KD stands for cost of debt after tax. Always remember it is after tax. Clear with this? Why is it after tax? Because we are considering tax savings also. Clear? I is the annual interest payment. NP stands for the net proceeds of the debenture, or if the net proceeds is not given, you can take it as the current market price. Why? If I were to raise new funds today, I will raise it at current market price only. Are you clear with this? You can do, and remember always when flotation cost is given, it needs to be reduced. Clear with this? T stands for tax rate. Are you clear with this, guys? Are you clear with this? And they have given this explanation. Net proceeds means issue price less issue expenses or flotation cost. And if issue price is not given, then the students can assume it to be equal to the current market price. Issue price, if it is not given, take it as equal to the current market price. Clear with this? Today, let us say in equity shares is quoting at 15 rupees per share. The face value is only 10. Clear? Now, if I have to raise fresh money from the primary market, I am not a fool to actually issue it at 10 rupees. The company will issue this at 15 rupees. The 5 rupees is called as a premium. Are you clear with this? Will they be ready to buy? Absolutely yes. Because in the market, they can readily sell it at 15 rupees. Tomorrow it might even grow. Are you clear with this, guys? Are you clear with this? So if the issue price is not given, don't say it is not given. Take the current market price. Are you clear with this? Fine. And the flotation cost is given. That also needs to be subtracted to arrive at your net proceeds, because effectively net proceeds is your effective inflow. Are you clear with this? What do you mean by flotation cost? So this is what you've seen. You see the new issue of security involves some expenditure in the form of underwriting, brokerage fees, legal, administrative charges, etc. The sum of all these costs is known as flotation cost. This expenditure is incurred to make the securities available to the investors. The flotation cost is adjusted to arrive at the net proceeds for the calculation of cost of capital. Clear with this, guys? Any problem here? Any problem here? Are you all clear with this? Are you all clear with this? Yes? Fine. Okay. Right? Now, so in your class, in your notebook also, you please give a reference to this page number in your handbook. Okay, the exact formula with the full definitions and all is given here. I don't want to waste your classroom time in dictating all this once again. The explanation, the logics I have given you, exactly these are the exact words used in the study material. I'm giving you the logic for that. There is no point in writing this once again. Clear with this, guys? Please write down your handbook page number and all. This is a standing instruction. Always do it. Clear with this? So whenever I am referring to the handbook, you should also write that handbook page reference, so that when you are revising it once again, you will also revise it in the same order. You will go, okay, this was explained in the class. Here, after explaining this, sir gave this reference to the handbook, so immediately you should do that. That is the way to do it. Your note taking should be flawless. It should be absolutely perfect. Clear with this, guys? Fine. Right. Now, please go to the first question. Please go to the first question, right? It's on whatever page number, 21, I guess. So please go to that first question. Guys, shall we get started with this? Yes? Quick. Fine. A Limited issued 30,000 debentures, 30,000, 15% debentures of rupees 100 each. So how many number of debentures were issued? 30,000. Every debenture has a face value of how much? 100. What is the interest rate? 15%. Clear with this. The cost of the issue was 30,000. Meaning what? Flotation cost is 30,000 or issue cost is 30,000. Determine the cost of debenture capital if they were issued at alternative number 1, par, and alternative number 2, premium of 10%, alternative number 3, discount of 10%. Clear with this, guys? Clear with this? Life, the period of the debenture is given in the question? No. Don't complain that the question is incomplete. Assume it to be irredeemable. That's all. Are you clear with this? Since it is not given, you will assume it to be irredeemable. Fine. Assume it to be irredeemable. Assume it to be irredeemable or perpetual. Assume to be perpetual, whatever it is. Clear with this, guys? Now, shall we do this? Shall we do this? Right? Let's get started. So now, write down question number 1. Guys, quickly do it along with me. Nothing new here. You guys already know it. So write down first question. Give the handbook page reference, the cross-referencing and all. You do it. Guys, after we do every sum, yes, you need to give this. In your notebook, write the handbook page number. You can find the question. In your handbook, write the notebook page number. You can find the solution. So whether you're going from the notebook or from your handbook, you can find each other. From the solution, you can go to question. From the question, you can go to solution. That should be your level of note taking. Because day before your exam, one day and all, if you want to revise the entire subject, I'm telling you, you can revise the entire subject 4 or 5 times a day before the exam, provided you have taken your notes properly. Clear with this? Else day before the exam, if you turn pages, if you are not even clear where you have written what, then it will be very difficult because this is not the only subject. You have a total of 6 papers. So please be careful. Watch out for that. Now, guys, first tell me, KD formula, guys. This is what? Irredeemable debenture. Correct? KD is equal to what is the formula? Interest into, shout the answer. Yes. 1 minus tax rate divided by net proceeds. Clear with this? This is a common formula, whether it is 1, 2 or 3. Guys, clear with this, guys? But this is the formula for what? Irredeemable debenture. Correct? Irredeemable debentures. Correct, guys? Yes. Now, let us do this. First, the first part of the question is what? At par. Issue is happening at par. Guys, correct, guys? Yes. So, write down. KD is equal to, first, what is the interest, guys? What is the interest? 15%. Right? On what? On the debenture value. Now, in this question, if you see, this flotation cost is given as a bulk figure. It is not given per debenture. Clear? So, what we will do? We will take the total. That is, we will not calculate this per debenture wise. We will calculate this total wise. That is, 30,000 into 100 is the total value of debenture. On that 15% is the total value of interest. Are you clear with this? Write down. Please write down here. So, what is the interest amount? 30,000 into 100 rupees 100 into what is the percentage, guys? 15%, right? Into 1 minus tax rate. What is the tax rate? What is the tax rate? Not given in the question, so don't assume anything here. Tax rate, if it is not given, take it as 0. Are you clear with this? Are you clear with this? Right? Divided by net proceeds. How will you compute the net proceeds? Now, guys, you tell me, in this question, issue price is given. Guys, what is the issue price? Where is it given? Issue price, is it given? No, it is not given. If they had given you the current market price, you can take that as the issue price. If not, what will you do? Take it at par. That's all. Nothing is given. So assume that the issue is happening at par. Okay. So now tell me net proceeds, what I will do. So total amount, how much I'm going to get? 30,000 debentures, each at the rate of 100. Correct? Is that all? Is that all? No. Minus flotation cost. Very good. Minus 30,000 rupees. So numerator, I have what I pay every year. Denominator, I have net proceeds. How much I receive. Come on, guys, do this calculation and tell me how much is this. So I think this comes out to rupees 4,50,000 divided by, guys, tell me the answer by now. You should have told me. Denominator, what is it? 29,70,000, right? 29,70,000 into 100, right? Into 100. So how much is this, guys? 15. Yes, 15.15% or 152%. Clear with this? Guys, quick, we should catch up speed. Done? Yes. Completed, guys. Shall we go to the second one? Yes, sir. Number two. Now tell me, KD is equal to, numerator, will it change? Guys, numerator, will it change? No. So whether you are issuing at par, discount or premium, the interest will be calculated only on the face value. So 30,000 debentures, each issued at 100 rupees. Correct. That is each having a face value of 100 rupees and a total cost of 15% is the interest into 1 minus tax rate, 1 minus 0 upon. Now guys, denominator, what is the net proceeds they are saying? The second part of the question is issued at a premium, which means initially how much amount I'm getting? 30,000 debenture. Each debenture I'm issuing it at 110. Guys, correct? But do I get the entire amount? No. Reduce how much? 30,000 minus 30,000. Guys, logical guys. Is there anything that you need to mug up? See how simple it is. See how simple it is. People are mugging up this formula. They are saying FM has a lot of formulas. You take the time in learning the subject conceptually, it will be a cakewalk for you. Clear? So tell me guys, what's the numerator? Anyways, numerator is there the same. 4,50,000. Every year I need to pay a total interest of 4,50,000 divided by, what's the denominator guys? Yes, 32,70,000, right, into 100%. So how much is that? Yes, 13.76%. Are you clear with this guys? Are you clear with this? Yes. Line gap. Third one, at discount. Okay, so the second one we didn't write. This is at premium. Okay, the third one is at discount. Now guys, tell me guys. See guys, this is the best way to do. Initially write the formula. Okay, you write the formula initially and write. 1 minute guys, please hear me out. In exam, you also need to write down where KD stands for cost of debt, I stands for interest, T stands for tax rate, NP stands for net proceeds. Clear with this? You need to write that in the exam. In the exam, this alone is not sufficient. You need to write what stands for what. Clear? In the classroom, I discussed it once. So I am in the classroom where we need not repeat it for every sum. That's why I'm leaving you here. Clear with this? But in the exam, you need to write so that they don't reduce marks. Third part of the question, guys. So now come on, tell me, how do you do this? KD is equal to, what is the interest? How do you compute? 30,000 into rupees 100. This 100 is what? This 100 is issue price. No, this is face value. This 100 is face value. Why? We are computing the base on which we are going to compute the interest. Clear with this? Divided by. So here 30,000 into 90, right? Fine, that's the amount you receive. No, from that you will also have to reduce 30,000 because there is an outflow here. So tell me guys, this is rupees 4,50,000 divided by, yes, 26,70,000. So how much is that? So into 100, that's going to be 16.85%. Are you clear with this? Are you clear with this? Yes guys, right? Are you clear with this? So now, if I'm issuing it at par, what is the rate? 50. What is the cost? 15.15. If I am issuing it at a premium, the cost, net effective cost is 13.76. If I am issuing it at a discount, the net cost is how much? 16.85. Why are they changing? Because the cash flows are changing. Are you clear with this? Are you clear with this? This entire chapter is about matching of cash flows, irredeemable debentures, sum of infinite equal cash flows, geometric progression model. So we saw that A by 1 minus R, all that formula we derived. You remember guys? So we got annual cash flow divided by the discount rate. So we just cross multiplied and we arrived at, or if you want, you can also say KD is equal to what I pay upon what I receive. What I pay on the numerator is nothing but interest into 1 minus T. Denominator, what I receive, NP, and NP should be adjusted for flotation cost. All these things you have to be careful. Clear with this guys? Clear with this? Because of silly mistakes, students lose mark here. 5 marks, some guys. Very easy, no? 5 marks they will give you. Okay, it may come as first compulsory question, whatever it is. 5 marks can't you score? Very simple. Is there any formula that you need to mug up? Logically, you can think. Clear with this, guys? Done? Done? Now, please go to the last page of your book. Please go to the last page of your book, and on the top, name this page as Library of Adjustments. Right? Now, this is a very important thing that you need to follow after every sum. So I will give you the template. Open the last page. From the last page, you can move to the other pages. So have the last page. Please open these columns at the top. Chapter number, question number, handbook page number, classwork page number, and a long gap for adjustment. A long gap for adjustment. What is this? I will tell you. What is this? I will tell you. So now, guys, this is what chapter we are doing right now. Number. Chapter number 2. Write down 2 here. What is the question number? 1. Handbook page number. So in which page it was there? 21. No? Okay. Classwork page number. This will change. This only you can write. This is the reason why I asked you number your pages. Your respective classwork page number you write down. Clear with this, guys? Clear with this? Adjustment I will tell you. Write down. Write down. Please write down. Cost of irredeemable debenture. Write down. Cost of irredeemable debenture. Within bracket KD. Cost of irredeemable debenture. Within bracket KD. Cost of irredeemable debenture. Within bracket KD. Clear with this? Now, what is this library of adjustment? For the benefit of all, let me tell you what this is. Basically, in this library of adjustment, after we finish every solution, we will be coming here and we will be updating. See, for example, this chapter number 2, question number 1. This question, if I want to find out, I can find it in page number 21 of the handbook. Solution, if I want, I can find it in your respective classwork page number, right? Now, what we learned in this question, KD computation, cost of irredeemable debenture. Like this, for every single sum that we do in the classwork, we are going to keep on updating. This is like a scorecard, a report card that we will be maintaining. Sir, last page you have asked us to open. Once this page gets over, you turn the page like this and start doing it. Clear with this? That's why I didn't ask you to leave 4 or 5 pages and then do it. No, from the last, you go from the reverse, it's okay. But this library of adjustment has done wonders for people. The day before the exam, you only have 1 day or 1.5 days, whatever is that, right? You need to revise the entire subject. How will you do that? Now, one look at this library of adjustment, you know which sum talks about which topic. Now, we will be capturing what is the unique adjustment or the learning objective in every question. We will be tracking it here. Suppose you want to only see sums relating to KP, that too with a finite period, not infinite period. Go here, you can track those sums, KP with finite period. These sums alone you can quickly revise and come back. It will not take beyond 4 to 5 minutes for you to revise all those 4 or 5 sums put together, provided you have this kind of control. Are you clear with this? My suggestion would be is to maintain this for all your practical papers, at least with the practical papers. Today, little extra 1 minute after every question, but cumulatively, if you see at the end of the next few months, once we finish our sessions, now once you're opening the book again for revision after the next few months, obviously you will see how much tremendous amount of efforts that you have put in. All these efforts will pay off. You yourself will not believe. This is the power of note taking. Clear with this, guys? Clear with this? Fine. Students, they have told me well before. Many students have, they've told me, they've even called me. One guy even called me at, after he came out of the exam hall, 5:02, he called me, 5:03 or something like that. He called me, said, thanks, sir. This was really helpful. All the library of adjustments was so helpful. Simple reason. Now you are taking the efforts. I'm just directing you to do that. You will thank yourself for doing it. Clear with this? So library of adjustment is a very, very important thing. Those who are attending the recorded lectures, please maintain this. If not for this, then why else are you spending your time? Right now, you are spending a lot of time. The time that you are spending right now in watching the lectures and all, it will make sense only when you are able to revisit the entire thing in a fraction of a second. So this is more like you are respecting the time that you are spending along in the lectures. Clear with this? In my opinion, if you watch the lecture once, that's about it. You don't have the time to watch again. You have multiple subjects. So how will you be able to effectively retain whatever you have learned in a particular lecture? Only by note taking, and this is going to be very helpful for you. Clear with this, guys? So now, so the first sum I wrote this down, right? From the next sum onwards, these columns you need to fill. Okay, only this column I will tell you what is the adjustment. Clear? You fill these columns. Chapter number 2, question number 2, what page number, reference and all you give. Right? Then and there you do it. Then and there. When in the classroom itself you do it. Clear? Don't say I will go home or after watching the session I will do it. No. Then and there you do it. I will dictate this part alone. Other parts you should be able to quickly incorporate it into your particular library of adjustment. Clear with this, guys? Deal? Yes. Please follow this sincerely and religiously. You will thank yourself later, not just in your intermediate, when you are studying for your final. You will not believe the kind of power this has. You will definitely not believe you can even teach your friends with the kind of knowledge that you're getting. So trust me, this will help you a lot. As a student, I used to maintain this because my faculties used to tell me I am just passing on the legacy to you all. I have personally benefited a lot out of this. My students have also benefited a lot out of this. I want you guys to also benefit out of this. Clear with this, guys? Fine. So coming back here. So we finished what? The first question, right? Fine. And what have we seen till now? We have seen the cost of debenture. Under that we have seen irredeemable model. Clear with this, guys? Clear with this? Now, so this is what A. You had written down A, right? Under debentures. Now take a green ink. Write down B. Write down B. What is B? Redeemable debenture. Redeemable debentures. Redeemable debentures within bracket KD. Now, sir, what do I do in case of redeemable debenture? Now, let us learn this concept by way of an example. Please write down the example. Example, life of debenture is equal to 10 years. Coupon rate meaning what? Coupon rate meaning what? Discount rate. Interest rate. Coupon rate. Discount rate only we are computing, no KD. Coupon means interest. Interest rate is 10%. Coupon rate is 10%. Right? Then issue price is equal to rupees 900. Now this issue price, they can call it as B0 or they can call it as PV, present value. Right? Are you clear with this, guys? Yes. Any which ways they want, they can give you. And remember one thing, if they have given flotation cost, it needs to be reduced from the issue price to arrive at something called as net proceeds. If no flotation cost is there, your issue price is equal to your net proceeds. Clear with this, guys? Fine, you know all these things. Yes. Face value is equal to 1000 rupees. Right? It is redeemable at par. Redeemable at par. Calculate KD. This is the question. Calculate KD. Done, guys? Done. Write down solution. Write down solution. Now, guys, wait. Now, what we need to calculate? KD. What do you mean by KD? It is nothing but the discount rate. Now, I have the inflows with me. Guys, do I have the inflow? Yes. Do I have the outflow? Every year, what I'll be paying? Interest into 1 minus tax rate. Correct? Yes. Fine. Outflow I have. Right? Right. Now, I have inflow. I have outflow. Do I have the period? Yes, that also I have. The fourth variable alone I need to calculate. What is that? Rate. Correct? Calculating that rate is only called as what? Cost of debt. Are you clear with this? Or in other words, can I say this is nothing but IRR calculation for debentures? IRR calculation for debenture is called as what? Cost of debt, KD. Are you clear with this? Are you clear with this? Yes. So this is one way of computing, which is the correct method, called as IRR method, also known as yield to maturity method, YTM method. Second method is actually called as a shortcut formula method. Shortcut method, formula method. Clear with this? Every sum, there will be multiple source of finance. For every source of finance, you need to compute IRR and do it. It will be difficult for you to calculate, guys. Correct? for examination, for academic purpose, there is another for method of doing it called as shortcut method, also known as formula method. There is a formula, right? But that formula will only give the approximate value. It is not the perfect method. What is the perfect method? IRR. Clear? The correct cost you will get only by using IRR method. Alternatively, for ease of calculation, they have introduced something called as a shortcut formula method. What is that formula? We will be seeing it. First, let us solve this sum under IRR method. Then I will tell you formula. Formula means, again, don't think you need to mug up. Logical. That is absolutely logical. And I will also tell you what is illogical in that logical formula. Are you clear with this? Yes, okay, right. What I'm saying is that formula, I told you it gives you some approximate value only. Yes, I will tell you the logic behind that formula. And I will also tell you why it does not give you the correct answer. Clear with this? Fine. We will see all these things in detail. But once you spend time here, KP is also the same, exactly the same. Only one difference is there. What is that? No tax saving. Are you clear with this? KD, exactly same as KP. Everything is same. One difference, no interest. No, that is no 1 minus T will not come. Are you clear with this? Once you finish KD, automatically KP is also over. We will be seeing it. That's why we are spending a lot of time here. Once we enter into KP, we'll just finish in a fraction of a second. Clear with this? Few minutes, we will be done with it. We will be solving question for every model. Don't worry about it. Clear with this, guys? Let's get started. So, write down. Alternative 1, write down. Solution. 2 alternatives are there. One is what? IRR, called as yield model, yield to maturity model. The other one is the formula, shortcut model. So write down alternative 1, IRR technique. And this chapter we are computing from whose perspective? Tell it again and again to yourself. This chapter is being done only from the company's perspective. Now guys, now I want you all to frame the cash flow equation. Is it possible to frame the cash flow equation? Guys, tell me guys. This is what? A complete financial transaction has both inflows and outflows. Guys, I've told you. Yes. Now tell me, this is from the company's perspective. They are raising money from what? Debt mode, debenture mode. Initially, there will be what? Inflow or outflow? Inflow. What is the inflow they will be getting? Guys, tell me. 900. Ideally speaking, 900 minus flotation cost. This some flotation cost is there? No. Similarly, tax rate is also not there, so you can ignore it. Because it is not there, ideally it should also come. Clear with this, guys? Yes. So can I say the rate that equates my inflows with my outflow is called as IRR, correct? Or in other words, the cash flow equation will be 900 is equal to. So at the end of first year, what will be the cash outflow? Interest. What is that interest? 10% on 1000, 100, correct? It is going to be 100 into 1 minus T, but in this sum, tax rate is not given, so we are assuming it to be 0. Else it will also come. Clear with this, guys? Yes, right? So can I say 100 divided by 1 plus R to the power 1. R I can call it as KD, correct? No, guys, KD, because the rate that equates my inflows with my outflow is going to be called as the what is it called as? The discount rate or the IRR, correct? The IRR computed for debentures is called as KD. Are you clear with this, guys? To the power 1 plus 100 divided by 1 plus KD to the power 2. Correct, guys? Like that, it goes on. In the last year, what will it be? 100 divided by 1 plus KD to the power 10. Correct? Is that all? No. After this, the company also needs to repay what? That entire capital. So every debenture, they need to repay how much? 1000 rupees. So plus 1000 divided by 1 plus KD to the power 10. Are you clear with this? Instead of R, we are using the word KD. Are you clear with this? So this is nothing but the discount rate or the IRR rate applicable for debentures. Are you clear with this, guys? So we are going to find the rate that equates my present value of inflow with my present value of outflow. That is what I said as cost of capital in this chapter. It is a discount rate always expressed as a percentage. Guys, clear with this, guys? Clear with this? So now how will you do this? Is there a formula to do this? No. Trial and error method only. Guys, trial and error method only. Clear with this? We have already seen this before, right? So now let's do this under trial and error. Guys, quickly shall we do it? Let us not spend more time. We have spent a lot of time in IRR calculation. So I will tell you all these things. Write down. Let KD is equal to how much? Let KD is equal to, let us take 10 percentage. But what we need to do, guys, this 900, we need to take it to the other side. Correct? So we need to compute NPV. You know that, no? Yes. So write down. NPV at 10 percentage. NPV is equal to, now can I say this is nothing but 100 into present value interest factor of annuity of 10 percentage for 10 years. Correct? Plus 1000 into present value interest factor of 10 percentage 10 years. Guys, correct? Look at this, the backbone, time value of money. Are you guys clear with this? Yes, am I right? Guys, are you all clear with this? Fine. That's about it? No. Minus what? Minus 900. This 900 goes to the other side. It becomes an outflow. Net present value means what? Present value of inflow minus present value of outflow. Guys, clear with this? Right? So now NPV is equal to, I will give you the figures, 100 into, so the present value interest factor of annuity for 10 percentage 10 year is going to be 6.144. Clear with this? From the table, generally they will give you the figure. Clear with this? Plus 1000 into present value interest factor of 10 percentage 10 year is going to be how much? 0.385. Clear with this? Minus 900. Now what you need to do? Pray God that you should get what? Exactly 0. Why? Because IRR is the rate that makes my NPV equal to 0. Guys, clear with this? So yes, pray God that you are getting it. But how much do you get NPV here? Overall calculate and tell me.
Positive 99.
You get positive 99.4 something. Positive 100 you are getting. Clear with this, guys? So if I take my discount rate as 10 percentage, how much am I getting, guys? 100 rupees positive approximately, right? Clear with this? Now the next trial. So is 10 percentage my cost of capital? Sorry, is 10 percentage my KD? No. Why? Had it been my KD, my NPV would have been 0. Guys, clear with this? So clearly this is not my KD. Clear with this? IRR, KD. Clear with this? So now what will I do? I want my final answer, that is NPV, to reduce, which means the next trial I will take a higher discount rate. Clear with this, guys? Let the KD be 12 percentage. Please take it now. Let KD is equal to 12 percentage. Sir, how did you take 12 percentage and all? Because I know the answer, but don't worry, for you in the exam, they will give you multiple tables. Clear with this? With that, you can find out which two trials you need to take. Clear with this, guys? Write down. So now NPV is equal to 100 into present value interest factor of annuity of 12 percentage for 10 years plus 1000 into present value interest factor of 12 percentage for 10 years minus 900. Clear with this? NPV means what? Present value of inflow minus present value of outflow. So NPV is equal to 100 into the present value interest factor of annuity for 12 years for 10 percentage. How much is it? They will give you in the question ideally 5.650. Clear, guys? Plus 1000 into present value interest factor of 12 percentage for 10 years is going to be 0.322 minus 900. Guys, these figures and all, even if they have not given, can you calculate? Yes, I have taught you everything in time value of money chapter. Please, if you're not confident about it, please practice sums in time value of money before doing this. Clear with this, guys? Yes, but ideally they should give you these figures. If not, also you should be self-reliant. So now pray God that you should get NPV equal to 0. But how much do you get?
Negative 13.
Negative 13 rupees negative. Right? Clear with this? So we clearly know that. Your KD stands somewhere between your 10 percentage and 12 percentage. So using interpolation technique, we can find out. Clear with this, guys? Yes. Clear with this, guys? So I clearly know, if you look at this rate and NPV, or let me not call this as rate, I will put this as KD itself. So if I increase my KD by 2 percentage, guys, look at this. If I increase from 10 to 12 percentage, if I increase my KD by 2 percentage, right, by how much is my NPV reducing? From positive 100, it became negative 13. So can I say it falls by 113?
Yes, sir.
Correct, guys? It falls by 113. But I want my NPV to fall only by exactly 100 rupees. Guys, correct. So exactly by 100 rupees. So by how much should my KD fall? So I know that my KD is 10 percentage, sorry, yes, 10 percentage plus something. Are you clear with this? How much is that something is what we are calculating right now. So can we say this is nothing but KD is equal to 10 percentage plus 10 percentage plus. So you tell me, how do you calculate this, guys? How do you calculate this? So for 2 percentage it is 113. How much is it for 100? So can I say this nothing but 100 into 2 percentage divided by 113? Are you clear with this? So you can say this is 100 into 2 percentage divided by 113, or you can use that formula also. I told you earlier, NPV at lower level divided by NPV at lower level minus NPV at higher level multiplied by higher rate minus lower rate and all. Yes, you can do that also if you want. Clear with this, guys? Interpolation technique. Are you clear with this? So now tell me, how much is this coming out to? How much is this coming out to? Huh?
770.
1 point.
Total answer, sir.
What's the final answer? You just tell me that. That will do.
11.770.
11.76
77.
or 77? 7699 you are getting. Okay. 11.77 percentage. Are you clear with this, guys? Are you clear with this, guys? Done? Done with this? Done with this? So now we have clearly found out what is the KD. Are you clear with this, guys? Done? Done? Easy, right? What is this? Nothing but IRR. Computed from whose perspective? That you need to be careful, from the company's perspective. Clear? And here only the cash flows relating to debentures are considered. That's why I'm calling that as a discount rate applicable for debenture, which is popularly called as KD. Are you clear with this? Are you clear with this? Guys, clear with this? Now, every time you cannot keep doing this IRR, because IRR computation itself is big. There will be multiple sources of finance. For every source of finance, KD 1 IRR, then KP 1 IRR, KE 1 IRR, KR 1 IRR. If you keep doing like this in exam, you cannot finish it, correct? So for comprehensive sums, generally you can use an alternative method, which is called as shortcut method or formula method. Write down, guys. Alternative 2 shortcut stroke formula method. Shortcut stroke formula method. Right? What is this shortcut method? What is this shortcut method? Please go to your handbook. Please go to your handbook. I think it's page number 9. Please go to your handbook. Okay. The formula is, can you see this? Is this visible? Right? Okay. The formula is I into 1 minus t plus RV minus NP by N, the whole divided by RV plus NP by 2, where I stands for interest amount, not interest rate, interest amount, interest payment. Clear? T stands for what? Tax rate. RV stands for redemption value. NP stands for net proceeds. N stands for life of the debenture. Clear with this? Or the period of the debenture. Anything else I have left out? No. Everything I have covered. Are you clear with this? Are you clear with this, guys? Are you clear with this? So what is the formula? I into 1 minus t plus RV minus NP by N, the whole divided by RV plus NP by 2. Clear with this, guys? So we write this formula here. You please write this formula here. I into 1 minus t plus RV minus NP divided by N, the whole by RV plus NP divided by 2. Yes, are you getting it? Yes, you will be able to tell the formula by yourself. Huh? Yes. Yes, sir. So you don't want me to explain the logic behind this? Right. Okay, there is no problem. That's why you are here. Absolutely no problem. First, let us substitute the figures. Arrive at the KD using this formula, and then I will explain the logic behind this particular formula. Why the formula is like this? No need to mug up, guys. Very simple logic. Now tell me, guys, how much is the interest? Look at the question and tell me. 100 into 1 minus t. There is no tax rate. 1 minus 0. Clear with this? In this question, they have not given tax. Plus RV, redemption value, how much?
1000.
Redemption value, how much is it? 1000, right? 1000 minus NP, net proceeds, how much I'm receiving today? How much, guys? How much? 900 divided by what? What is the life of the debenture? 10 years, right? The whole divided by redemption value, how much is it? 1000 plus
900.
NP, this is 900 divided by 2. Guys, done? So write down these figures. This is going to be 100 plus. So 1000 minus 900, how much is it? 100. 100 by 10 is how much? 10. Correct? 10 divided by 1000 plus 900 by 2. How much is that? 950. How much is this, guys, coming out to? Tell me how much is the figure? 11.579. Okay, 11.579. You can round it off to 11.58. Or you better keep it as 11.579. No problem. Clear with this, guys?
Yes, sir.
Guys, are you clear with this?
Yes,
Yes.
sir.
Are you clear with this? Right? So if you use the shortcut formula, what is the KD that you are getting?
11.
Come on, 11.58. But if you use the IRR formula, what is the KD you are getting? 11.77. Sir, why is there a difference? Which one is correct? Technically, which is correct, guys? IRR method is the superior method, right? Sir, then what makes this shortcut method inferior? Why is this method not giving the correct answer? I will tell you, but before that, first, you should understand the logic for this question, or logic for this formula. Guys, the logic for this formula I'm explaining, this is nowhere in the study material or in the handbook. Please pay attention. Now, KD, I told you, is nothing but what I pay divided by what I receive. Correct? Guys, correct? No. You just think from the viewpoint of the company. In the numerator, we are considering all the costs. What costs we are considering? First, interest we are considering.
Yes.
Correct, guys? Yes. Veera, please pay attention. Yes, you're focusing here. Very important, because I'm giving you the logic here. Interest you are paying, correct? But that is not my entire outflow. Parallelly, I'm saving some tax. So the first type of outflow that I have is interest into 1 minus t. Clear with this?
Yes, sir.
Clear with this, guys? Yes. Now, is this the only cost that the company is incurring? No. What they are saying in this question, they are saying, if you look at the question, they are issuing at 900, meaning what? When I'm receiving the money initially, I will receive how much? 900. But when I'm repaying it, I will repay how much? 1000. So technically speaking, the company is incurring extra cost of how much? 100 rupees. Correct? Correct. But this extra cost of 100 rupees is not pertaining to 1 year. It is pertaining to how much? 10 years. That is the reason why here we have kept RV minus NP divided by N. That is the annual cost of that overall difference in that premium that I am paying. Premium, or whatever is that you can call it as, the difference between RV and NP. Clear with this? This 1000 and 900, difference between that 100, is that a cost incurred in a single year? No, it is a cost incurred over a period of 10 years. So divided by 10. Are you clear with this, guys? That is also a cost only, no? Guys, that is also a cost for the company. Are you clear with this? Are you clear with this? That is why you get this particular cost. So my cost is not just 100. Annual cost of this difference is 10 rupees. Correct? Divided by, I need to take the debenture capital amount. Correct? What is the debenture capital amount? I have two figures. One is the issue price. I have another one called as redemption value. Which one should I take? Confusion is there. Simple. Take a simple average of 2. That is why you have RV plus NV by 2. Are you clear with this, guys? Are you clear with this? So the capital, should I take the initial capital or the end capital with respect to the debenture amount? Which amount should I take? take a simple average of these two figures. Clear with this? Are you clear with this? Are you all able to understand? Any doubts, please ask now itself, because this is the basis. Same logic for KP. Everything is the same. Every single thing is the same. I into 1 minus t. Instead of that, you will have preference dividend. That's all. Everything else is the same. Clear with this? Are you getting the logic? So my cost is not just my after tax interest cost. I also have this cost, that is the difference between my redemption value and my net proceeds. Are you clear with this? Are you clear with this?
Yes.
Now, is this logical? Is this logical? Now, tell me the formula without looking at anything. Tell me the formula. KD is equal to interest into 1 minus t. Is that the only cost? No. Plus RV minus NP by N. Clear? Annual cost of that particular extra amount I pay. The whole by which capital should I take? Simple interest. RV plus NP by 2. What is the big deal here, guys? Spend some extra 30 seconds in knowing the logic. You can teach your friends what it is. See, students are just simply saying that, FM has a lot of formulas and all. Now, did you take any efforts in learning this formula, in remembering this formula? Even in midnight, if someone wakes you up and asks you, you should be able to tell the formula. Clear? Once again, you tell me, KD is equal to I into 1 minus t plus RV minus NP divided by N, the whole divided by RV plus NP by 2. As simple as that. Clear with this, guys? Any issue here? Right? This is a very logical formula, no doubt. Then you might ask me, sir, why is this formula, the answer that we are getting in this formula, not matching with the answer that we got in IRR? Clear with this? Simple and straightforward reason. This formula ignores the concept of time value of money. How, sir, how are you saying? How do you think that it is ignoring time value of money? How can we say? How can we say it is ignoring time value of money? Huh? It's okay, tell no.
For 10 years.
Okay.
That's the calculation for.
Simple. This 1000 rupees is what? Redemption value. When does redemption value happen? At the end of 10 year, T10. This 900 is what? Net proceeds. When does this happen? T0. Now, I told you, cash flows arising at different intervals are not comparable as such.
Yes.
Correct? But what they have done in this formula, 1000 minus 900. This 1000 they didn't even convert into present value. This is in future value. Clear with this? They ignored all the time value of money and they just made a simple calculation. Clear with this, guys? So this formula ignores time value of money. That is that in the denominator also. RV and NP cannot be added as such. NP is received at today, to date, this particular day, T0. RV arises at T10. They are not comparable as such without discounting. Are you clear with this? So they are ignoring the concept of time value of money. That's why you get only an approximate answer. It will revolve somewhere around this. Are you clear with this?
Yes.
Now, one more thing I will tell you. This formula will be useful for this. Suppose they are asking you to do this sum under IRR method, right? In the question, they have not given you any discount rate. That is, the tables also are not given, which means trials you need to take by yourself. Correct? Sir, how will I take the trials? How will I take the trials? What you can do is, first you use the shortcut formula, arrive. So approximately my IRR is how much? 11.58, correct? Based on this, you can take the trials. First take 10%, then take 12%, or you can even take 11% and 12%, but preferably take a difference of 2% because this is an approximate answer. What if the answer, suppose if this is showing as 11.12 and the IRR is giving an answer of 10.89 or something, how will you know? That's why preferably take 2% spread, 10%, 12%, you take this difference, automatically you will get it. Are you clear with this, guys? Are you clear with this? So you can even use the shortcut formula to pick the trials that you have to use in your IRR. Clear with this, guys? These are some extra tips that I'm giving you so that in exam, generally they have to give you. If not also, you must be able to crack this. Clear with this, guys? This can even come as a 2-mark question or a 1-mark question in your MCQs. Clear with this? They can give you all the figures, calculate KD as per approximation method. You can quickly do it. You can quickly do it and you can calculate. Are you clear with this, guys? Who knows? Maybe institute can also come up with something like this. For me to solve this question, Under IRR, which two trials are preferable? Option A, 10%, 12%. Option B, 15%, 20%. Option C, 5%, 10%, and something else. Option D. You have to exactly pick this 10 and 12%. How do you know? Using this approximation method. Are you clear with this, guys? This is where you need to think out of the box and make use of all these things. So now, have you understood the entire whatever we have done till now? Have you understood all these things, guys? Yes? Fine. Now, sir, in exam, should I follow IRR method or should I follow shortcut method? If the question is silent, you can pick any method and you can follow. Clear with this, guys? If the question clearly says IRR method, or if the question says yield to maturity, if they use the word yield, it means they are asking only IRR method. Clear with this? If they are saying nothing, then you can better use shortcut formula because it is easy to compute and you can finish it off. Clear with this, guys? Yes, that's about this particular area. And the most preferable method out of these two is what? The most preferable method out of these two is IRR method. Are you clear with this, guys? Yes, fine. So now look at this. Second. So this is what they have also given here. Redeemable debentures. If you look at the page number 9 of your handbook, look at this. This is what they have mentioned. Cost of redeemable debentures. They have mentioned this. Then I will come to this. Wait. Then they have also used one more thing. Using present value method or yield to maturity method. This is nothing but IRR method. So what they have done, look at this. The cost of redeemable debt can also be calculated by discounting the relevant cash flows using the IRR. The concept of IRR is discussed in chapter 7, investment decision. See, in the study material, they have discussed it in chapter number 7. I told you all these things I picked from study material. But look, there is a sequence in which you should learn. We studied it first itself. For a simple reason that here itself it is required. Are you clear with this? Fine. So if you are a person who is following the study material for self-study and all, first you should study all the time value of money concepts, IRR, NPV, and then only come to the second chapter itself. Clear with this, guys? Fine. So it's the IRR. So how do you know? First, year 0, pick the relevant cash flows. The net proceeds you need to take. Are you clear with this? It is called as NP or P0. And every year, what will be the cash outflow? Interest into 1 minus T. And at the end of the year, you will also repay the entire redemption value. Fine. So at the end of the year, you will also repay the redemption value. And now what you need to do, calculate the relevant cash flows and you need to arrive at the IRR. They have just given a theoretical procedure, but we have even done a practical question on this regard. Clear with this, guys? Clear with this? Fine. Now, this is only for theoretical purpose. There has not been a single sum they have tested using this particular formula. So let me just tell you what this is. Shortcut formula. What is the formula, guys? Interest into 1 minus T plus RV minus NP by N, the whole by RV plus NB by 2. Clear? Right. Interest into 1 minus T. Why are we doing 1 minus T? Because interest is an expense that is allowed for the purpose of income tax deduction. Correct? Now, some authors, what they are saying, RV minus NP, the difference between that, correct? How much was that? 100, correct? Divided by 10. Every year I am amortizing how much? 10 rupees. I am taking the 10 rupees as a cost, correct? Some authors say, this 10 rupees is also a cost, correct? On this also, tax deduction will be available. Guys, this is also a cost, Guys, on this also there will be a tax saving. So they are saying, on this also there will be a 1 minus T. Are you clear with this? Are you clear with this? They are saying interest is a cost. Deductible? Yes, tax deductible. Now they are saying RV minus NP by N. This is also an annual overall cost, that whatever is the cost difference between that RV and NP, this is also a cost for the company. They are saying this is also allowed for income tax purpose. Whether it's actually allowed or not, that's a different discussion which you will be studying in your income tax separately. Fine, you have some ICDS and all, so they have some separate rules. Let us not get into that. I'm just talking from the perspective of finance. They are saying this is also tax deductible. So on this also you have tax savings. Are you clear with this? So 1 minus T is also applicable on this. Are you clear with this, guys? Or they are saying take 1 minus T common outside. So they have rewritten this formula as KD is equal to I plus RV minus NP divided by N. Right? This whole thing into 1 minus T. Why? This 1 minus t is applicable on interest. On this cost also, they are saying there is a tax deductible expense divided by RV plus NP divided by 2. Clear with this, guys? This is the next formula they have given. Look at this. Look at this. The second formula, I plus RV minus NP by N. Can you see this? Yes. Into 1 minus t, the whole by RV plus NP by 2. Clear? So, what they are saying, the above formula is to calculate the cost of debt is used only when interest on debt is tax deductible. That is the first formula. Sometimes the debts are issued at a discount and or are redeemed at a premium. If the discount on issue or the premium on redemption is also tax deductible, then use this particular formula. Clear with this, guys? Now, which one should I use in exam? Institute themselves have clearly given, in the absence of any specific information, student may use any of the above formula to calculate the KD with a logical assumption. Clear with this, guys? It's an open-ended subject, so obviously you will be having these kind of doubts. So which one to follow? Preferably follow the first formula, because generally, globally, this is what is being followed. Clear with this, guys? Are you clear with this? Fine. Are you all clear with this, guys? Done? Done. So now tell me, in debentures, what did we study? In debentures, what did we study? There are irredeemable debenture, you have redeemable debenture. So we need to calculate what? KD. In case of irredeemable debenture, what is the formula? Every year, whatever I pay upon what I receive, or in other words, I into 1 minus t divided by NP, net proceeds. In case of redeemable debenture, there are two methods. One is called as IRR method, which you know how to do it. Take two trials. First, frame the cash flow equation, then take two trials, interpolation technique, one positive NPV, one negative NPV, interpolation technique, do it. The other one is called as shortcut method, or it's also known as the formula method. So what is the formula for that? Come on, tell me. I into 1 minus t plus RV minus NP divided by N, the whole divided by RV plus NP by 2. Are you clear with this? Yes, if you want, you can also consider the second part, that is RV minus NP by N. That also is tax deductible if you're assuming. Then take 1 minus t common outside. Clear with this? I am just giving you that as a passing reference. Nowhere in the shortcut formula we will be using this. Clear with this? We will be using only the first formula. Clear? Since it is mentioned in the study material, I am telling you, in the institute study material also, they have not used it anywhere for any of the practical sums. Clear with this, guys? Shall we just do one question here and then close the session?
Yes.
One question shall we just do?
Yes.
Fine. So please take the next question, which is question number 2. Right. Shall we get started, guys? Yes? Let's quickly do this. A company issues rupees 10 lakhs 12% debentures of 100 each. Wait, meaning what? Meaning what? They have given the value of funds raised by way of debenture. Don't think that they have issued 10 lakh debentures. No, the value of debenture capital raised is 10 lakhs. So what is the number of debenture raised? 10 lakhs divided by 100. Are you clear with this? Are you clear with this? That's how you need to do it. Fine. The debentures are redeemable after an expiry of a fixed period of 7 years. Clear? Finite or infinite life? Finite life. The company is in the 35% tax bracket. Required, calculate the cost of debt after tax. So cost of debt itself always means after tax only. They need not give you that. It's always after tax. If debentures are issued at alternate 1, par, alternate 2, 10% discount, alternative number 3, 10% premium. Are you clear with this? They are saying what issue price they are saying. Clear with this, guys? So par means what? 100 rupees. Discount means 90. Premium means what? 110. So accordingly, the number of debentures will change. They are talking about issue, right? Now, part number 2 they have given. If a brokerage of 2% is paid, what will be the cost of debentures if they are issued at par? Clear with this? That is the second part of the question. So what you need to do while doing the second part of the question, for calculating the net proceeds from the issue price, you should reduce the brokerage. And they have just given 2%. what will you do? You can either apply it on issue price or on the face value. In this question, issue price is at face value, so no problem. Clear with this? Clear with this, guys? Are you clear with this? Fine. Shall we get started with this question? Now, which method we will be using? Finite life. Finite lives can be done in how many methods? Two methods, IRR or discount. IRR or shortcut method. We will be using shortcut method here. Clear with this, guys? Nothing mentioned, you use shortcut method. Saves a lot of time in exam. Clear with this, guys? Write down. This is question number 2, right? Give all the page references here. Question number 2. Fine. So, they have given the first part of the question. So, 1A. So, 1A. 1A. So, KD within bracket par. Okay, but before that, preferably before starting itself, it's better to write the formula. I'm sorry, I missed it. If you have a space, please write it on the top. KD is equal to, write the formula by yourself. Tell and write. Tell me, guys, what is the formula? I into 1 minus T plus RV minus NP divided by N, the whole by RV plus NP divided by 2. Correct? Here we are subtracting, here we are adding, logic and all I've told you. Clear? Here we are taking a simple average of the two capitals. Here we are reducing the two and arriving at the effective cost that extra I am paying. Clear with this, guys? Guys, I've told you, again I'm telling you, learn like a child. Please learn like a child. Bring the child mode. It's okay. No one is going to judge you. Even if they judge, it is their problem. I just shared the story of Priyanka Chopra also. What others think about you doesn't matter. As long as you are progressing well in your life, it's more than sufficient. Clear with this? Come on, guys, let's get started. So now tell me, guys, so what is this? So how many shares have been issued? First, issued at par. Correct? So we can do it based on the total value itself. So that is not a problem. So now tell me, guys, what is the interest payment every year? Guys, what is the interest payment? 12% on 10 lakhs. How much is this? 1,20,000. So write down KD is equal to, so 1,20,000 into 1 minus T. What is T, guys? Tax rate. 1 minus 0.35. In this question, it's 0.35. Plus RV minus NP. What is the redemption value?
100.
Have they given anything? Redemption value? Guys, no. Which means I will assume it to be redeemed at par. Correct, guys? So overall redemption value is going to be 10 lakhs. Clear with this? We are doing in total. So 10 lakhs minus, what is minus? Minus issue price, net proceeds. So what is the net proceeds here? 10 lakhs only. It is also at 100. Are you clear with this? So here you are not paying any extra amount to the investors. Clear with this, guys? Divided by N. What is the life?
7.
What is the life? 7. The whole divided by 10 lakhs plus 10 lakhs divided by 2. That is going to be 10 lakhs once again. Clear with this?
Yes, sir.
Guys, yes. So tell me, what is the figure? What is the formula? What is the final answer? You do all the calculation. Tell me the final answer alone. Quick. Come on, guys. Bring up the speed. In exam, you don't have the luxury of time. Come on. Tell me. If you've got it, tell me, please. 7.8%. Yes. Are you all getting the same answer? Yes, guys. Fine. Shall we move to the second one? Guys, quick, guys. 1B. KD within bracket issued at discount. Come on, guys. KD is equal to interest. How much is the figures? 1,20,000 into, this will not change, into 1 minus 0.35 plus RV. How much is the RV? This will also not change. They have not given anything. Assumed to be redeemed at par. RV minus NP, net proceeds. Today I am receiving how much? How much, guys? Only 90 rupees per debenture. So how much is it going to be? 10 lakhs divided by 100 into 90. How much is that? Guys, 10% discount. Or you can say 10 lakhs into 90%. 9 lakhs. That's all. Correct? 9 lakhs. Clear with this. Right? Divided by 7. The whole divided by 10 lakhs plus 9 lakhs by 2. 10 lakhs plus 9 lakhs by 2. Do the calculation. Tell me the answer. Let us see. Whoever gets first, please tell me the answer. Once the figure is populated here, it means one of your friends have completed already. Quick guys, tell me the figure. I want the final answer.
9.2.
How much?
9.2.
No, please check your answer. 9.2. No. Please check the answer. Guys, come on. Anyone else? Then tell me. 9.71 percentage. That's the right answer. Please check your calculation. Do it. You can't just make silly errors here. You spending a lot of time on learning the concepts. Just by silly mistakes, you cannot leave marks. You checked your error. You corrected it. You know where you made a mistake. Took a reading and corrected it. Do it. You should know that you made the mistake in the class. Tomorrow when you're revising it, you will automatically be very careful in these areas. That's why I'm telling you. No one is going to see. It's your book. You are the best judge. Done, guys? Done, Veera, done? Done? Yes, shall we move to the next one? Write down 1C. What is 1C? KD within bracket issued at a premium. Correct? Issued at premium. So KD is equal to interest amount. How much, guys? 1,20,000 into 1 minus T. 1 minus 0.35. Correct? Plus redemption value minus issue price. Redemption value, how much is it? Guys, 10 lakhs. Correct? What is the issue value? What is the issue value? I am issuing it at a premium of 10%. Meaning what? 10% on 10 lakhs is 1 lakh. So 10 plus 1 is 11. Minus 11 lakhs. Write down. Minus 11 lakhs divided by 7. The whole by 10 lakhs plus 11 lakhs divided by 2. Clear with this? Clear with this? Now I know you might be having a doubt. Sir, if you do this part, you are getting it in negative. Why? See, when I got the inflow, I issued at how much? 110 rupees. Guys, focus here. Yes, when I redeemed it at par 100 rupees, which means what? Now I have taken more money from the investors. Are you clear with this? So it will obviously go on to reduce the cost only. Are you clear with this? I have taken the money from them. I'm not paying them anything extra. Are you clear with this? So apart from the interest, in fact, I have taken some extra money from the investor, which means the difference between that should go on to reduce your cost. Are you clear with this, guys? So it is correct only. Don't think that you have committed a mistake. It can also be negative. Do the final calculation. Tell me the figures. Come on, quick. Quick, guys. I'm doing every single sum for your benefit. Please make the best use of it. But calculation wise, I want you guys to pick up speed like anything. With accuracy, that is more important. Tell me, guys, how much is the figure? Guys, anyone? 6.067 or 6.07 percentage overall. You guys got it? Yes, fine. Shall we go to the second part of the question? What is the second part of the question, guys? What have they said? If a brokerage of 2% is paid, what will be the cost of debenture if the issue is at par? Okay. Anyways, the redemption is at par. How do we know? This question is silent. Guys, always remember, if the question is silent, redemption is at par. If the question is silent, issue is at par. If the question is silent, you will take about the life of the debenture, you will take it as irredeemable. All these things you should know. Correct? In finance, this is what generally is followed. So write down the part 2 of the question. Write down, guys. Come on. Second part of the question. Write down KD within bracket when brokerage of 2% is paid. Write down KD is equal to. Now guys, tell me what is the formula here? So yes, what is the interest amount? That will not change. 1,20,000 into 1 minus 0.35 plus redemption value. What is the redemption value? At par, 10 lakhs. Correct? Redemption value 10 lakhs minus What is the net proceeds? What is the net proceeds I get? Initially, I get how much issued at par only. Correct? I get 10 lakhs. But wait, from the 10 lakhs, you get what? From the 10 lakhs, you get what? 10 lakhs minus 10 lakhs minus 2% on 10 lakhs is how much? 2% on 10 lakhs is how much? 20,000 minus 20,000. So the net proceeds is only going to be 9,80,000. Clear with this, guys? So this is my net proceeds. It's going to be 9.8 lakhs. Are you clear with this? The whole, the divided by what? Number of years, 7. The whole divided by what? 10 lakhs plus 9.8 lakhs divided by 2. In exam, please don't write this L and all that I am writing. You don't even write that in the classroom. Put it fully, 10 lakhs. Put the digits fully. L and all is not accepted. For thousands, K and all is not accepted in exam. I am doing it for our discussion. Whatever I am doing here is just for you to refer. That's all. Technically, you need to do it by yourself. And I'm trying to make you do things by yourself. Now tell me, guys, how much is the final answer? Tell me. 8.168 or 17% approximately. 8.168. Do the calculation. If you have not got it, please do it by yourself. Come on, guys. Do it quick. Fast. Done. Completed. Are you all getting the same answer? Guys, did you understand how we got this net proceeds? Net proceeds is nothing but issue price minus flotation cost. So issue was at par, 10 lakhs I received. But wait, parallelly I incurred 20,000 also. So net proceeds, net means what? You are netting off your flotation cost. So net proceeds is 9,80,000 only. Are you clear with this? So I need to repay him 10 lakhs, but I received only 9,20,000. So which means effectively I am bearing 20% more, 20,000 more, which is also my cost. But that 20,000 is a cost that I am incurring over a period of 7 years. 20,000 by 7, that is a per year cost. That is the logic for the second part of the numerator. Guys, clear with this, guys? Clear with this? Yes? Fine. Just go and update your library of adjustments. Give all the cross-referencing. I'm just going to tell you the library of adjustment. Write down. Cost of redeemable debentures. Cost of redeemable debentures within bracket KD. Within bracket KD. Hyphen formula method. Hyphen formula method. Hyphen formula method. Semicolon par premium discount. Semicolon par premium discount. All varieties we have done in the sum. Clear, guys? Done? Fine. So with this I am concluding this session. Guys, please revise. Please revise till whatever we have covered till now. Without revision, please don't attend the next session. You will not understand anything. Please revise it and sit for the next session. Only then you will be able to understand. Clear with this, guys? Yes. So it is nothing but time value of money concepts. In this chapter, I am just giving a few seconds, 30 seconds summary. We started off with the chapter called as cost of capital. We saw why we are studying this chapter, the logic and all. We saw that, and cost of capital chapter is nothing but discount rate calculation done from the viewpoint of the company. So every source wise calculating the cost is what we are going to do in this particular chapter. So we started off with what? Debentures, the first source of finance. So debentures, we saw irredeemable model, redeemable model, irredeemable model. What is the formula? So you have only a single method. It is using time value of money only. So it is nothing but interest into 1 minus t divided by what? Net proceeds, what I pay by what I receive. Clear with this? But when it comes to redeemable model, two methods are there. One is that yield to maturity, that is IRR model. The other one is your shortcut formula. The shortcut formula is nothing but I into 1 minus t plus RV minus NP divided by N, the whole by RV plus NP by 2. Are you clear with this? This is what we have seen. Now, the next part, preference and all, will be exactly the same as KD. KP is exactly the same as what? KD. Only one difference. Interest into 1 minus t, you remove that and put it as PD, preference dividend. That's all. It is not tax deductible also. So PD into 1 minus t will never come. PD. That's about it. The entire concept also is over. Clear with this, guys? That is why we have spent a lot of time here. Don't think we have done only 2 questions. The logic and the fundamentals, the background behind this chapter we have started. So now on, the chapter will move little quickly. Clear with this, guys? So with this, I'm signing off in this session. I will see you all in the next one. Thank you all so much and have a good day.